Amid all the numbers involved in the FTX meltdown, this one is worth remembering. More than 1 million people and businesses may still be owed money. It is a shocking statistic in a story that is full of them. The top 50 FTX creditors, meanwhile, are owed more than $3 billion. That is according to recent court filings. None of them, though, are named, so we don't know who they are. Multiple US lawmakers, though, have been reacting by asking regulators to get to work helping protect crypto investors from this type of failure. That includes Congresswoman Maxine Waters. She highlighted concerns over FTX's native token, FTT, and said that robust federal oversight is needed. The value of FTT crashed at the start of this saga when Binance said it was selling its holdings. The token had been trading at around $25 beforehand. Perhaps surprisingly, it is still worth something now, around $1.30 according to CoinMarketCap.com, which means the total market capitalization of the token is still some $460 million US. Crypto.com's native token Kronos also took a hit at the time. It fell to around a 22-month low but picked up slightly in the aftermath. In both cases, questions had been raised over each exchange's holdings of their own native tokens. So should we now be worried about all of these native tokens? Authorities in South Korea have had some concern for a long time, as Forkast's Danny Park explains.
South Korea has always been very vigilant of its booming crypto industry. In 2017, it banned ICO's initial coin offerings, and in 2021, they added anti-money laundering regulations that basically gave exchanges an ultimatum to meet their strict AML KYC regulations or just basically shut down. So one of the new rules is that local exchanges are not to list and broker the trade of their own issued crypto token.
Authorities have recently been making sure that those rules are being followed. Danny earlier spoke with Korea's Financial Intelligence Unit.
There have been rumors of some smaller exchange named Flata listing what appears to be a native exchange token. The FIU told me that their action is yet to be a full-fledged investigation, but with the FTX collapse and contagion spreading throughout Korea and in Asia, I think a bigger investigation is to come in the near future.
So is South Korea onto something that we should all be aware of? Well, sort of. Lachlan Feeney of blockchain product developer Labris has told Forkast that FTT's issues were unique.
It appears as though the FTT token was created for the purpose of FTX to basically print money out of thin air, sort of strengthen their balance sheets or inflate their balance sheets. And, FTX was the biggest buyer of this token, and they were basically moving this token back and forth between FTX and Alameda. So there was no real, genuine sort of market demand for this token.
Lachlan says because that can help lower fees, it does potentially help larger traders, but the value is still minimal when compared to the sheer number of tokens that are out there. He says that while Binance's BNB started out in a similar way, by offering a way to get discounted fees, it's since evolved.
The BNB token has this enormous utility, this enormous distribution among users. It's used to pay gas fees on their chain, and it is actually solving a real-world problem, which is we want a blockchain that has super low transaction fees and high throughput.
Lachlan reckons that the crypto space goes through two phases when issuing native tokens is concerned. The first is where projects are not seen as being real Web3 contenders without being tokenized, which is what happened during the 2017 initial coin offering bubble. After that bubble burst, we moved into this second phase where many products launched without tokens unless there was a good case for them to exist.
This is why all of the DeFi projects and layer 2 systems and ENS and all of these really solid projects that came out of the 2018 bear market, most of those projects did not have tokens.
Since then, we've seen a return to projects launching tokens up front. Lachlan reckons that's where the danger lies.
If you need to go out and pay someone to build utility into your token, then you should probably be questioning whether you need a token or not in the first place. And what most projects do is they just say that, oh, well, our token utility is if you want to use our protocol or you want to use our product, you have to pay in our token. But that's not utility. That's just adding friction to your product for no reason at all.
All right, that's it from us. Do make sure you like and subscribe to this video to get more content like it, and let us know what you think about all of this in the comments.